In the words of Keith Jackson, whoa, Nelly! Good morning and welcome. It's the Patriot Radio News Hour. Happy Friday. The Waste Management Open, the Super Bowl, all coming. The Super Bowl's in Minnesota. One of those things, again, I'm sure the stadium is beautiful, but the Minnesotans like to come here, not the other way around. But nonetheless, it is the last of what I call the holiday weekends. I hope today finds you well. If you woke up this morning, it's a good day. And I was telling Arlene, I usually feel that way. You know, hey, I woke up, all right. Way to go. You did good. And it's Friday, so even better. Got everybody and their brother out there at the Phoenix Open. That's what I call it. I know it's the Waste Management, which is just weird because it's a garbage company, but I hope you enjoy the spectating. The weather is drop-dead gorgeous. Puxatawny Phil. That's right, it was Groundhog Day today. Feels like every day is Groundhog Day. I feel a lot of times I feel more like Bill Murray in that movie where I wake up and it's the exact same day. Saw his shadow 6 more weeks of winter, so I guess that means we're 6 more weeks of 80-plus degrees and sun shining because we really haven't had much of a winter here in the Valley of the Sun. For those other places that do, sorry about that. But by the way, he's only been right 39% of the time. So he's probably, let's face it, he's much better at being right than the Federal Reserve, so give him a little credit. And plus, he's a groundhog. I mean, what does he know about weather? So anyway, 800-951-0592. I'm Joe Jaquin, CEO of the Patriot Trading Group. Legal, lawful, constitutional, tender wealth insurance. It is what we do. We do it better than anybody. The website at allamericangold.com. And we got a lot to talk about. Everything is selling off today. And when I say I'm everything, bond market, huge sell-off in the bond market. The 10-year note up to 2.85 just this week alone. $40 billion more in debt financing for this year on the spike in the 10-year note, well, and really all the notes, right, in the bond market. The Dow was off 300 points. A lot of the stuff, the Dow, the S&P, the NASDAQ, gold, they're all down about 1%. All pretty much identical. Oil and silver are down more. Silver, matter of fact, again, I'm going to say it again, back up the bus. I know I say it seems like I say this every couple of weeks, but today is the day, and I say today because silver, it can bounce right back here, but it's down about 50 cents. Below $17, you can get cases of Silver Eagles for under $10,000. Rolls of Silver Eagles today down to $3.90. We are getting calls for 2018 silver. I can get them for you. I can. They're $410. And I understand if you want them because, hey, I buy one every year, so you're having your little collection. I get that. But outside of that, a Silver Eagle is a Silver Eagle. And why spend an extra, $20 or, really what we're talking about, an extra $1 an ounce when you can buy a backdated year for $3.90? But either way, we have them available. If you're looking for something that maybe you've never bought before, today and today only, it's going to be a one-day deal. Only because I think they're a super cool-looking coin. 2018 Buffaloes. Okay, so the Buffaloes is the only. That's the 24-karat coin. They come in this really cheesy, hard, not even a hard plastic, a soft plastic. Do not stack stuff on top of them. And 24-karat gold's very soft, but it's it's got the Buffalo and the Indian. It's an awesome-looking coin. They make them every year, but the 2018s, one of our suppliers put them on sale today, 14 and a quarter for a 2018 Buffalo. When I say 14 acre, $1,425 for a 1 ounce American 2018 Buffalo. If that interests you at all, at 800-951-0592. So what happened? You went to bed. You woke up this morning. What's going on? We had the government's jobs number out. Now, I'm going to tell you right now, I'm going to give you a chance. If you don't want to hear what the real truth of the number was, don't come when we go to commercial break, change the channel. I mean it, right? Because if you want to believe that the bond market spiraling out of control is still going to allow for the great rally in stocks, and if you want to believe that all these jobs are coming back and everything's going to be great, we're going to get 12% GDP growth, don't listen to the next segment. But if you want to understand what's happened in real life, it's something where even I was surprised. I'm going to tell you right now, the number was actually fine. It was fine. 200,000. The mix of jobs, that was okay too. It wasn't all restaurant jobs like it was all last year, so I mean that's a positive. But I'll get to why the sell-off occurred, why the huge spike in the rates. Is inflation coming? I'm going to tell you right now. I know I'm right, and I know Ellen Greenspan agrees with me, and today I even feel better about it. We're going to talk about that next. Don't touch that dial.
Then put your little hand in mine. There ain't no hill or mountain we can't climb.
Happy Groundhog Day. You know what I'm thinking about? I like the one where, like, he was in the bathtub and killed himself. And then how about when he had Phil in the truck and went flying off the cliff? That was great, right? I've actually thought about doing that. I haven't, but some days I feel like it. I'm not going to lie to you. But today, it's a great day to be alive, right? We woke up. It's a great day. All kinds of craziness going on. Like I said, if you don't want to know what's really happening, don't listen. But let me tell you what the news of the day was. So the jobs, this was the government number, came out at 200,000, and that was kind of in the range, you know, from 180 to about 210 was, you know, what most people were expecting, and it came in at 200. So that's, you know, as far as I'm a little better, right, than the expected. Not out of line, but better. They did revise down November's number quite a bit. They added a little bit to December's number. If you throw in the revisions to December and November, you really get to about that 180-ish number. So it was, when all sense of the words, it was an inline number. That is not what we've been told, right? We've been telling everybody's hiring, right, and this and that. I want it to happen. 180, 200,000, that's really average what we've been seeing all along. This number is not a great January number even, right? It's average. There's nothing wrong with it, but it's average. The unemployment rate, unchanged. So that didn't move. Now, and people are saying, hey, the unemployment rate's going to go into the threes. It could, because let's face it, it doesn't really mean anything anymore because they don't count anybody. Right? It's right. I mean, it could be 0. It could be 12. It doesn't matter, right? Because, like I said, they don't count everybody. The number that really matters in that regard would be labor force participation. That's probably now the more important number. So the other thing was all these people are rushing back into the job market. That didn't happen. That number was unchanged, 62.7. So no movement, no big influx of people rushing back into the job market. And they don't do – January is not a month where they do revisions because you got to wait for those. They only do them a couple times a year, and you have these big drops in the labor force participation rate. But it was unchanged. So what got everybody so excited was the print on the wages. And have you seen Rocky II? You know, the one where Apollo Creed's trying to get Rocky to fight him, and Rocky doesn't want to fight him, and then Rocky goes to Burgess Meredith and says, "Hey, I think I want to fight him," and Meredith slaps him in the face, right, and didn't even see that coming. Then next thing you know, he's eating his soup on his busted up bedroom set, and Apollo Creed's making a fool out of Rocky, and he throws his soup at the TV and then calls Balboa and says, "Let's fight him." That's how I felt this morning. I mean, I wanted to throw up because they here's the headline number that wages spiked 2.9%, right, which would, again, that would be great. I'm all for it. And everybody was talking about, this is it, here comes inflation, Bill Gross, 10-year note's going to go above 3%, and everybody's, how many times is the Fed going to hike, and all of these things. The part they didn't tell you that the wages spiked was, believe it or not, and this is not me. Okay, first of all, I want this to be clear. This was from the government's own jobs report this morning. The total weekly hours worked took the biggest drop, and because this number doesn't drop very much, but it took the biggest drop in years. So, yes, you got paid more per hour, but no, you didn't make any more money. As a matter of fact, average hourly earnings only rose because the total hours worked posted such a steep decline. According to the government's own data, average weekly earnings fell in January from December. In December, $919.43. Now, that just tells you, now, again, most people out there, 70% of the people don't even make $50,000. So it's got everybody in here, right? All the CEO pay and all that. $919.43. January, according to the government's data, where wage inflation is coming, you only made $917.18. And I don't mean to laugh. The problem was what the employer did. So let me ask you this. This is what you got to. This is how you got to look at it. Your employer came to you and said, "Joe, man, you're doing a great job, and we really like you. And well, let's be truthful. Arizona raised the minimum wage, so we got to pay you more." That's probably more what really happened. But since we have to pay you more, we're actually going to cut your hours. And at the end of the day, let's just say it's close enough to say it was a wash, right? If they paid you more money, you got less hours, so you're no better off. But like I said, the headline number said wages increased 2.9%. But in actuality, the paycheck, and I guess we could argue, what's more important? Does it matter if you make $10,000 $10 an hour or $20 an hour, $50 an hour, doesn't matter what kind of raise you got if at the end of your work week your paycheck didn't change. But the way they do math means that inflation is coming. And really, let's face it, businesses, and I've been saying this all along, and it's why I just, keep talking about stagflation. The businesses, okay, here's the raise. We're just going to, I know you're working, 38 hours, but you know what, now you're going to work 36. Hey, I know you're working 25, but now you're going to work 23. I mean, that's really what this report showed. It showed two things. Number one, at least not yet, there has been no huge spike in hiring. Right? It's kind of been what it's been. And we kind of went down a little bit. The number of jobs created every year has gone down. Matter of fact, 2017, 2016, they put a lot of revisions. They went all the way back through last year's number. 2016 and 2017 total jobs created were like almost identical. They were within 50,000 jobs for the whole year. So there really hasn't been a lot of any job growth yet. This report, again, kind of what we've been expecting and seeing. The big number, the number that created, I guess, all the heartburn was the headline wage inflation number. And you should have, again, if you had the idiot box on, and I had Billionaire Row, Fox was disgusting with it, and CNBC, they were no better, right? Trying to, hey, this is what happened. Look at what happened. And then I'm like, is anybody going to say, hey, did anyone notice that people made less money this month? Just say it. Just say it. And if you think that isn't going to continue, it absolutely is. And here's the problem now. That 10-year note that continues to spike, right, you're going to continue to see your monthly bills get more expensive. Right, we already sit, and remember, this is what Alan Greenspan, and he was having a hard time. You can tell he's getting old. The clip we played yesterday, what he was trying to say, all these debts are already at all-time record highs. And now it's all going to cost these people more money. And now, come to find out, they said today, and I'm sure they're still blasting it, 2.9% wage. It's the best wage growth since 2008. Let's get the ticker tape. I'm sure Drudge is going to have a huge headline how great it was. You didn't make any more money. Why? Because businesses really don't need you anymore. I hate to say it. I don't want to be totally blunt here. The 10-year note was down to 1.4%. If a business needed to hire somebody and expand their business, that's when they were going to do it. Now with a spiking 10-year, they're not. And really, ultimately, if you think about it, you're the company you work for. If you need more employees because business is so good, I don't care what the environment is, right? You go out and you hire them. You go out and you hire them. And what this report said was, yeah, we paid people more, but we actually trimmed the fat some more, right? And so we'll see. I don't know, and what they don't do, and this is part of the problem, what I don't know is where was the growth in the pay? Was it in the hourly worker, or was it all up in the, what I'll call the C-level, the C guys, the C-suite guys? I don't know. But the only thing I can tell you is the average hourly work week, not by coincidence, declined by 2.9%. The exact same number, they said wage inflation rose. So if your pay went up 2.9%, but your hours worked fell by 2.9%, you didn't make any more money. So the wage inflation story, at least for this month, right? It could change, but at least for this month was a little bit of it was a misnomer. It actually reiterates my point of what I really actually believe is coming. So just keep that in mind. The other big thing they keep talking about was the Atlanta Federal Reserve GDP number, which they've never talked about ever. They are the best. I will say this. They are the best. But you have to wait. They always start really high. And then they start adjusting down as the data points come in. Now, the 5.4 that they've talked about, and if you don't know what I'm talking about, I apologize, but the Atlanta Federal Reserve has a GDP tracker, quarter by quarter, and they are at least the closest of all the research out there, Federal Reserve-wise. They released a number that said first quarter GDP 5.4%. Every time they release a first number, especially the first quarter of the month number, it's always high. I'll give you an example. The third quarter, when we hit 3.2% GDP, that number started at about 4.7, and it actually finished at about 2.4, and they came in at 3.2. It is better than what they normally started. I'll give it that. But by no means is the economy going to grow, at least I don't think, at 5.4%. But anyway, a lot of data, all of it very misleading.
This is the Phyllis Schlafly Report, a daily broadcast from Phyllis Schlafly Eagles. And we're upholding the legacy of Phyllis Schlafly, a constitutional attorney and articulate voice for traditional values for more than 70 years. Now, from the Phyllis Schlafly Center Studios, here's Ryan Haidt.
The same day President Trump vowed to end the visa lottery and chain migration, Attorney General Jeff Sessions said the men who committed the 2 New York terrorist attacks last fall were in the United States as a result of failed immigration policies. As Sessions explained, the 20-year-old son of the sister of a U.S. citizen should not get priority to come to this country ahead of someone who is high-skilled, well-educated, has learned English, and is likely to assimilate and flourish here. President Trump pointed out that the United States must fix its lax immigration system, which allows far too many dangerous, inadequately vetted people into our country. Trump was elected president in large part because Americans applauded the strength of his commitment to put Americans first and protect our borders against politically correct notions of multiculturalism and diversity. Congressman Steve King recently echoed an observation made by the Prime Minister of Hungary that diversity can lead to a lower quality of life, not a higher one. What is needed is not diversity as much as assimilation in order to remain a secure and prosperous nation. Assimilation has become a dirty word to the multiculturalist left, King wisely observed. Assimilation, not diversity, is our American strength. Supporters of diversity insist that recent immigrant terrorists became radicalized after they arrived in the United States, but even if true, that's all the more reason to oppose such immigrants because they are not assimilating themselves into our society, and instead are trying to destroy it. One of the first executive orders by President Trump was to issue his so-called travel ban to restrict immigration from certain countries associated with terrorism. Liberals then filed multiple lawsuits to block his executive order from going into full effect. In December, the Supreme Court ruled that the president's modified travel ban could be enforced while it is challenged in lower courts. It took nearly all of 2017 for the courts to allow the ban the president first issued back in January. But better late than never.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. Illegal immigration burdens our schools and social services and opens doors to criminals and terrorists. Outdated visa programs divert jobs from Americans. PhyllisSchlafly.com chronicles these outrageous unfair practices and provides answers. Go online to phyllisschlafly.com. Thanks for listening, and join us next time for the Phyllis Schlafly Report.
Welcome back, Patriot Radio News Hour. Yeah, I guess, just depends on what you want to focus in on. I like to look at the whole thing. And somehow, some way, we've gotten sucked in, even the earnings. I'll say this, and I'll just use the tech companies. Google, Facebook, Microsoft, Apple, and Amazon. Only one of those reports was actually really good, and it was Amazon, right? I mean, and really, when you think about it, and not to criticize, because right now they're the greatest company on earth. There's no doubt about it. But think about what they really do. They ship boxes. Granted, they ship them better than right. I mean, but that's really at the heart of it. That's what they are, right? They ship boxes, and I guess can we? I mean, a share of Amazon is now worth more than an ounce of gold, and they ship boxes. It's like $1,500. All the other ones, they weren't great. I know Apple best quarter ever as far as dollars go. Yeah, and iPhone sales were down. Right? 'Cause that's what happens when you charge $1,000. Right? Facebook. Oh, look at the ad revenue. Facebook. People spent less time on it, and even worse, first time ever, less people actually got on. So normally when that happens, right, what starts happening? Well, I'm not going to pay you that much for your advertising because when people aren't using it. Just say. And a lot of cheerleading going on. I hope, but I'm telling you, the more the data comes out, the more it's really right in front of your face. And the bond market, listen, this is a problem. If we're already at 285, if they hike 4 times, it's 4%. Wait, still in historical terms would be nothing. Could you imagine a 10-year at 4? That would add $400 billion a year to the national debt just in the increase in the rate. The amount of losses that would be incurred in the bond market would be astronomical. Now, I don't know if that's going to happen. Because remember, the first 5 rate hikes the Federal Reserve did, the 10-year note barely moved. Right? The rates didn't move. The short end moved, but now and matter of fact, the 30-year note's above 3. And you start really digging in. We had car sales out yesterday, right? It wasn't very good, right? And I guess there was a big headline: Ford can't build $90,000 SUVs fast enough. That's great. I mean, but their total sales was down over 6%, right? Chrysler was even worse. But then there was something they didn't talk about. The unsustainable trend in new car sales in the United States, created by the combination of lower rates and easy underwriting standards, right? And we've been talking about this. Now the bond market move here is really going to get crippling, but there's something else that you need to look at. According to the latest data from Edmunds, who tracks it, we have a growing problem that is afflicting the used auto car market. According to Edmunds, the percentage of used cars being traded in with negative equity. In other words, hey, I bought this car, been driving it around for 5 years, and it's I need to get rid of it. And by the negative equity means that the dealer lenders are willing to accept an immediate loss for a new transaction. The numbers are continuing to rise and hit a new all-time high. Think about January. Think about all the things I've been saying about how everything's costing you more. And think about what I just said about car sales. Now, if the highest level on record, 1 out of every 3 cars traded in is now underwater. Never, ever has it been this. And it matches all the other data points, right? Actual car loan debt at an all-time record high, and they're all underwater, right? Student loan debt, credit card debt, mortgage debt. In 2009 was not a good year. You know what the number was? It was 20%. We went from 1 in 5 to 1 in 3. The average balance of negative equity also was at a new all-time high. Right? They weren't underwater $1,000 or $2,000 or $3,000 or $4,000. They were underwater on average by over $5,000 per vehicle. That's up over from a decade ago. Okay, so go back to about 2007. The average, first of all, only 1 in 5 would come in underwater, and the average was less than 4. Now it's over 5,000. So as you continue to see this cycle building, it doesn't appear that there's a good outcome here, right? And that just makes sense. Right, and you just, and I know it's hard. Listen, I know we all want to believe, right, that, hey, we don't need to pay for any of these cuts. Right? It'll pay for themselves. Somehow, don't worry, it'll happen. Right? Right? We want to believe it. Right? We want to believe that companies are going to take this huge, another massive giveaway to Wall Street, which hasn't represented Main Street in 20 years. That they're really not just going to buy their own stock back this time, want to bet? Especially with interest rates running. Of course they are. We want to believe that somehow, right, the stock market, which when you look at all the key, bubble here, right? Everyone, no one thinks it can go down. Everyone wants, it's going to be great. And earnings are going to grow by 20% this year. Well, you cut their taxes by 15 of the 20, right? Duh. That's not that good. When you take out what we just gave them, the gift. And if you want to believe it, you can. Right? We all do. But when you look at all of it, when you look at the entire picture instead of this narrow focus, you see more than ever. Yeah, you need to get ready. Patriot Radio News Hour. We'll be back right after the break. Patriot Radio News Hour, 800-951-0592. U.S. Silver Eagles. I want to give you 2 prices. Back dates, $3.90 a roll. 2018. Because I know some of you have been calling and asking, and I get it, right? You like to buy a roll, at least one roll a year. You got a little collection going. Maybe that's, for the last 10 years, I bought at least one roll from every date. They're $4.10. So if you want to get a roll of 2018 Silver Eagles, by all means, call us. They're $410. If you actually want to buy, a lot of Silver Eagles, buy the back dates. And again, we are up to almost 80 now, 79.89 ounces of silver for an ounce of gold. David Morgan, he's the big silver guy, and I apologize for some of you if you don't know his name. It's not that important, but he's the big silver guy. He has this rule of thumb: when it gets to 80 ounces of silver for 1 ounce of gold, 80 ounces or more, you trade your gold in and you get silver. I don't know about all that, but I do know that from all historical perspectives, and we've talked about this several times now, it's super high. Super high. That silver's just underpriced. So if you're looking at silver today, $390 per roll for the back dates, $410 if you want 2018s. I told you we do have some 2018 Buffaloes if you're into that at $14.25. The deal of the day. I've got some XF. These are really solid. You know, we always, all of our stuff is good stuff, but these are solid $20 liberties. Gold is down $13, $13.31 right now. $20 liberties, $13.30. Or a 2018 Buffalo at 14.25. You know, whatever, mixed match, I don't care. U.S. $20 liberties. These are not going to be those older ones. By the way, one of my customers called me. Remember I ran the Dumb Stupid Idiots on the Type 2 liberties? He said that companies were selling them online for $2,100. That's why you shop here. $20 gold pieces. These are XF libs. These are solid coins. I'll tell you what, if you buy 10, I'll throw in 10 different dates today. Right at, let's call it right at spot 1330, spot's 1331 at 800-951-0592. That is our toll-free number. So we've got all kinds of different ways to go. And I know some of you are like, hey, I don't have $390. I don't have $410, or I don't have $1,330. I don't have $14.25. I put rolls of silver quarters back on special today at the $125. So trying to make it so everybody can get involved. So you got a lot of options out there. I'm telling you right now, buy the dip today, because this was a sell-off. It was a big sell-off on Wall Street. Everything got sold off, all created by the bond market. And when you looked at the reason why, the reason that they're saying, hell, there's this big jump in wage inflation, if you only looked at that piece of the puzzle, you didn't see what was real. Because what really happened was maybe you got paid a little more. Because I say maybe because they lump all the salaried and hourly guys. I don't know if the hourly guys got more or not. I want to say they did, because 18 states raised the minimum wage. But what happened was, whatever pay raise you got, your hours got reduced by the same amount. In other words, you didn't make any more money. And that's not me. That was the report from the government today. So when you see the headlines, just understand, they only tell you what you want to hear, or what they think you want to hear, right? The idiot box, the billionaire channels, viewership's been declining for the last 10 years, and they want people back there, and they're cheerleading and it all. Understand the whole story. We've got a spiking bond market, which is natural. When you look at what's really happened over the last decade, of course, bonds got to go up. Right? They hit lows that the world has never seen before. Right now, it's going to go the other way, and the problem is it's okay if the debt levels were low, right? Because then it's just inflation. But now the debt levels are so enormous. Now it's stagflation. Your wages, they're not, even if they grew, they're not going to keep up with this type of bond market. Right? Then you start looking at the real shape of auto loans. Right? What an all-time record high amount of people upside down, all-time record high of negative equity, and now we're starting to see all-time record high prices. And now all of a sudden, the interest rates are going to pay on these vehicles is spiking. Not to mention all the credit cards. The Dow's down 330 points today. And really, it's all simple. The 10-year note right now, 284 in change. 284 in change. You think about it, started the week below 270. It was like 263 or 264 at the beginning of the week. So it's moved up 20 basis points and has really caused a sell-off everywhere. Matter of fact, nothing. I don't see anything higher except the volatility index. Crude oil's off down over a dollar today, 64.72 on crude oil. 800-951-0592. Take the time. You're going to be rewarded for putting stuff away today. Patriot Radio News Hour, final segment of the week coming up. Final segment, Patriot Radio News Hour, 800-951-0592. Here's real simple. I'll cut to the chase. Here's the 2 coins you want to buy today. $20 Liberty's $13.30. That's $1. Now $1.10 under spot. Gold's starting to already recover here. We'll see what happens. It's still early in the day. $13.31.20 right now on gold. $20 Liberties. Is this thing on? Dude, we're below spot here. 800-951-0592. Old date Silver Eagles, $3.90. Those are the two things that you should be focusing on. 800-951-0592. Listen, we're getting ready. We're gearing up. Been talking a lot about adding some equity partnerships here. Yesterday I said, Phoenix, I've got my guy. If you really want in the Phoenix, I could take maybe one more person, so I don't want to exclude you. At least check it out. Give me a call. Colorado, I've already had just 3 people today calling saying I want details on it. Still looking for somebody outside of Arizona and outside of Colorado. I'm looking for another market to expand in. The Colorado market, listen, we're looking to get a bigger presence there. Since back in the days when they used to have the picnics and all of that, and we could go up there and see a lot of you all at once. We're trying to establish a bigger presence in Colorado, make things easier for all of you out there. And I'll just give you some details here. Looking for a minimum of 25,000, no more than 50, somewhere between 25 and 50,000. And because if it doesn't work out, and you know what, it's just not the fit that we were hoping for, we'll just give it back to you. I don't want it to be too big where we can't do that. So that's why we're looking for. It's a small amount, relatively speaking. We've been here 22 years, thousands of customers. But for Colorado, I'm looking for people that are in that Front Range area. This would be, part-time. The radio would be nice. Everybody that's going to be, if you want to be involved, we'll try the radio. Obviously, throughout the years we've tried a lot of people. It's not as easy as it looks. But there's other things. So even if the radio isn't necessarily your strength, there's a lot of things that we need that we're not doing. And you start thinking about some of these big shows like Alex Jones or Rush Limbaugh, it takes a bunch of people, and we're trying to get there. So if you're interested in becoming a small equity partner in this business, and listen, everything's here. We're going to get contracts ready to go. It's all going to be documented. So everybody up front, this is what I'm looking for. 25, no more than 50,000. I'm looking for a person and maybe 2 in Colorado. I've already got the guy here in Phoenix. I'll entertain one. But really, I think I'm good here in Phoenix. If somebody, though, I'm not going to turn you away. So I'll listen to what you have to say. I'm looking for one person outside of the Arizona and Colorado markets. The same deal, 25 to 50,000, and trying to establish a presence in another market. Then in Colorado, really, I think 2 people is really the answer in Colorado for what I have entailed. So if you want details or if you think you're interested, give us a call, 800-951-0592. Hey, listen, take the time. Listen, you're going to get rewarded today. Buy this dip and buy it hard. You're going to be glad you did. Dow's down 330, gold's down 13. Enjoy the rest of your weekend. I'm rooting for the Eagles. Not that it matters.